Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this document was last year included with the annual report that we gave out at regional board trainings. This year we've separated out the finance piece into its own section, and we're bringing it to you via video instead of regional board training. So we hope you enjoy the delivery method, and just know that this piece was last year a part of the full annual document. So this document is essentially a summary of the audit. It takes the audit and summarizes it into 4 pages. There's a couple calculations and then some information derived from the SEPI state website, which I'll go over all that. So we use this in our office to summarize this data and then discuss this data for others besides myself who haven't read through the entire audit. So that's what we use it as a tool for that reason. So we thought we'd share it with the board. So for that reason, we hope you find it beneficial. So we'll start right here in statement of net position. This is derived directly from the audit. So to show you that, we'll look at total assets. Total assets are $679,741. So we'll go to the audit for a moment. Here's the statement of net position. And here's the assets, and here's total assets, $679,741. If you wanted to come back and verify anything, you could come verify the numbers, please do. And here's the ending net position of 236,224. So we'll go back to the review sheet. So here's the, it says ending net position, that's the 236,224. That's the June 30th, 2014 ending net position. And then the previous net position is actually the June 30th, 2013 ending net position. So that's a good way to compare, and the net position did decrease from 2013 to 2014. So we'll scroll down. These are the balance sheet current assets. These are general fund current assets. I'll show you where those are at on the audit as well. And then over here we have general fund classifications on the balance sheet. So I'll go back to the audit. The balance sheet is 2 pages after the statement of net position. So 1, 2. Here's where it says balance sheet. We'll scroll down a little bit. So again, I said it was a general fund column, so make sure you stick in this column. So here's our general fund assets. It's important to look at these other funds, whether it's a food service fund, whatever, debt service fund, whatever it is. But for this area of the review sheet, we're just sticking in the general fund. So there's our assets. So we scroll down. Here's our fund balance classification. So we have a non-spendable amount and then an unassigned amount. So we'll go back to the review sheet. So here's all those assets. You could verify those. And then over here we have the fund balance classification. So non-spendable amounts are amounts that cannot be spent because they're either not in spendable form or are legally contractually required to remain intact. So these definitions are directly on the audit, so you can find them in the audit. And unassigned amounts are amounts that are available for any purpose. These amounts are reported only in the general fund. So you'll notice there's a negative unassigned fund balance. I believe there's only a couple schools that we have that had a negative unassigned fund balance, meaning that there wasn't enough money after, or there wasn't enough fund balance after all the different designations. So that's something to note. And then we'll move up here for a moment. This is the kind of the breakdown of the activity. So the beginning fund balance, revenues, total expenditures, other financing sources, net change, and then the ending general fund balance. So this kind of gives a snapshot of the activity during the year from a broad perspective. There's not a lot of detail in it, but it's pretty broad. But it does show the large net change, which we realized the Multicultural Academy dropped the high school program this year, which we'll get down when we get down to page 3. We'll speak about that in the enrollment section as well. So it's just something to remember as you look at this net change. So down here we have a couple calculations that were included on last year's review sheet, which was part of the annual report. So general fund divided by revenues takes the ending general fund balance, divides it by total revenues, puts it in a percentage. This one is essentially the same thing, only if there is a restricted amount down here, would subtract that out first. There is not, which is why these are the same. And then general fund divided by expenditures takes the ending general fund, divides by total expenditures. Now that is an indicator that the state uses, that the state looks at. If you read in the February 2015 state aid status report update, the governor mentioned this percentage in his one of his financial incentive criteria. So I think his percentage was 5%. So don't quote me for that, but I think off the top of my head that's what it was. So this would be below that 5%, just as a point of reference. And then so these two are important to look at. We like to look at this one because from our perspective, revenues are less likely to be skewed. So if you have a large capital outlay one year or something like that, or a program's put in place or something that there's a lot of expenditures one year, it seems like that situation happens more frequently than do revenues being skewed by a large contribution or something like that. So we kind of pay attention to this indicator for that reason, but just know that the state's looking at this one, and so it's good to look at both of these and then understand if one's skewed or one's not, just so you know. Last year, if you went back and looked at the annual report, last year this percentage was 8.11%, so 8.11%, and then this one was 7.64%. So from the charter school office, we look at the trends in these, so it's important to do that, then kind of figure out why it's trending one way or the other. So this one is the ending general fund divided by beginning general fund. This takes the ending general fund balance, divides by the beginning general fund balance. If it is below 100%, there was a negative net change, which there was a large negative net change, and this is well below 100%. If it is above 100%, there was a positive net change, and this would be obviously above 100% and positive. So last year, this percentage for Multicultural Academy was 66.44%, so it's actually decreased more from last year. So scroll down. These four boxes are derived from the notes section of the audit, and there's also notes included on page 4 of this review sheet, which we'll get into as well. So notes payable is referencing the short-term borrowing or state aid anticipation notes. So that's what that's associated with. Over here, normally this is, I classify this as long-term debt relating to building financing, like if there was a revenue bond or any type of bond. Most schools either utilize a bond or a lease to finance their building. In this case, though, on page 27 of the audit, it expressly stated a long-term debt that I wanted to include because it was classified as long-term debt by the auditor. So this isn't a revenue bond or anything like that, so this is kind of unique to Multicultural Academy, but it is something worth noting, and you can read about that in the notes section of the audit or on page 4 of this sheet. So one other thing, though, is there's a listing of long-term debt, but there's no long-term liability, so that's something to consider too. So don't be confused by that. I kind of caught that myself, but this is expressly stated on page 27 of the audit, so it's important to know that that's in there. So over here we have the leasing method for the building. So this $2.4 million is the total, including the current payment that happened during this year. So to show you how I calculated this payment, we'll go down to page 4 for a minute. The auditor said approximately $343,000, but then when he mentioned these related party transactions, he expressly stated the amount to each person. So I just added all those up, and that's where that total came from. For where is it at? Yeah, right here. And then this total takes the total owed at July 1st or at June 30th, 2014, and then adds that total, and that's where this total is derived from. And then this matches up with the ending total due for all the lease payments in the audit, which I can't remember off the top of my head, but I think it was page 29. So we'll get to that in the bottom. When we get down to the notes section, I can tell you exactly where that table is, where it shows all the coming payments. So that's what that's derived from. Over here we have management fees. This is the expressly stated management fees in the audit by the auditor. And then down here, let me click up here. This takes the management fees and divides it by the total state aid. So that is not the contractual percentage. That is taking the management fees and dividing it by total state aid to put that in a percentage. So that's what that is. Earned divided by fall 2013 takes the management fees and then divides it by the fall 2013 count, which is the corresponding count to this fiscal year. And then below that we have the building square footage. If this is inaccurate, let us know. It affects a couple of calculations. These are all formulas though, so I can just change the number and it will update everything. This is what I had on record from the paper copy of the audit, or excuse me, the charter contract. So if it's changed, let me know, please. And over here we have revenues per square foot, expenses per square foot, or expenditures per square foot. You'll notice that there was a higher expense or expenditures per square foot because that negative net change. So that's why revenues were lower than expenses or expenditures were. And then the difference, this is obviously our math can say that this is wrong. That's a rounding error. So I rounded these up to the nearest dollar. So that's what that's from. Up here, this payment per square foot calculation. So this takes the total payments during the year and then divides that by the total square footage. Now I included this calculation to compare, to be able to compare the bonded schools to the leased schools. So if the school was utilizing bond financing, I would include the total interest payment and principal payment and then divide that by the square footage. So that's what I've been doing for the bonded schools. And then the leasing schools, just their total lease payment. So the average for the Bay Mill schools, we charter 42 schools, and the average for this payment per square foot is $14. So this is slightly above the average, but it's just slightly above average. So over here we have operations and maintenance per square foot, which takes the line item down here of operations and maintenance, divides that by the square footage. The Bay Mill schools average for this one is $19, so again just slightly above the average. And then the square footage divided by fall 2013 count takes the total square footage and divides by that fall count. This is just kind of an indicator from year to year to see the space available per student, basically. So that's what that's calculating. And then general fund comparison. This takes the box in the upper right hand corner of page 1 and kind of breaks it out into more detail. So you'll see the revenues, expenditures down here. So the actual at June 30, 2014, the actual as of June 30, 2013, and then the difference. So you can see the reduction in revenues relating to the dropped grades. So it'll be interesting to see how the school responds in the coming school year, during the current school year. So I've had some questions about these line items, these individual line items, not necessarily these specific ones, but a bunch of different ones. And then some board members have asked what these accounting codes are. So I'll show you a quick trick that I use that maybe could be provided to the board members or whomever is interested in this method. This is the accounting manual, the Michigan Public School Accounting Manual. I put it into Microsoft Word. This is Word 2013. So once you do that, if you come up to the upper right hand corner, there's a find button, or you can hold Control and push F. And then once you do that, you come over to the navigation bar, make sure you're on results, and then you can actually skim through this document and find that. So then you could see the accounting code 110. Basic programs are instructional activities, including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. So I won't continue reading to you, but I'll scroll down and show you that it continues to go on and explain all the definitions and everything. So there's some really good information in here. If you don't know what something means, I would recommend looking this up and utilizing this tool. So with that, I'll go. Oh, before I go back, if you're going to search for something in this, though, it has to be a focused search. You can't come in here and type the word instruction, for example, because it will say there's too many instances of that word in Microsoft Word. So you have to focus your search, but it's a good tool to get a good understanding of what all this stuff is. So you could look at the comparison from year to year and note that all the expenditures were reduced, except for community services, and and added needs wasn't reduced either, I guess. And then so you can look at that from year to year and compare, and then compare to the current financial statements that have happened this year, and that's just a good way of comparing things. So this ending general fund balance should match up to that box in the upper right hand corner again. Below that we have our budgetary comparison, the original budget, the final budget, and the actual. This note over here is just stating that the original budget is due July 1, which is well before the start of the school year and well before the count data. So that's why there's sometimes a large discrepancy between these two. Which is the case in this situation. There's a very large discrepancy. And then this budget difference is the difference between the final and the actual. And then the percent change is the percent change between the final and the actual. So there are two things, two little calculations that you can look at from year to year to see how your the budget is operating, how close it is the actual to the final from year to year. So down here we have instruction percent of revenues. This is the, I'll show you what it does. We'll come up here for a moment. So this takes the total instruction cost divided by total revenues. If we scroll back down, so you'll note that 2012 it was 32, then it went up to 44, and then it kind of went up to 44.83. So so this kind of stayed steady even though there was decline in grades offered. So let's look at this for a moment. So our revenues actually declined by 500,000, but instruction expenditures only declined by 200,000, which is why so it's important to know that the relationship in this ratio is kind of tied to the proportion of revenues and instruction. So there's been instances where instruction expenditures have gone up at particular schools, but since revenues have gone up at a larger pace, that ratio actually went down. So you got to understand the relationship behind that ratio and realize that it's an indicator, it's not an absolute. I'll give you another example that of something that could impact that ratio while not necessarily providing less instruction. If a teacher is getting paid $50,000 and he or she resigns, retires, leaves the school for whatever reason, and the new teacher is hired for $30,000, that's going to lower the expenditures associated with that grade or teacher or whatever, while not necessarily providing less instruction. So it's important to note that that's a type of situation that could impact these ratios down here, while not necessarily providing less instruction. Now, someone's probably thinking right now, the quality of that instruction isn't the same. So I'm not going to get into that argument with you, but from a numbers perspective, finance perspective, that's an example of something that could impact this. So just know what this relationship is and know that there's some situations that can impact this. So this is just an indicator to ask questions. It's not meant to be an absolute. But if you were curious, out of the 42 Bay Mills Community College charter schools, the average is 44%, so Multicultural Academy is right on the average in that respect. So moving over here, this is the revenues and expenditures divided by fall 2013. So this takes the revenues and expenditures and divides by fall 2013. You'll note that this is larger than the revenues due to the large negative net change. So this you would hope to see this reverse from this year to next year. And then the difference between the two is down here. So moving into page 3, this is the enrollment numbers. These numbers are derived from CEPI, which I will explain what CEPI is since there are so many acronyms in education. So CEPI stands for the Center for Educational Performance and Information. If you wanted to get to the data, you come down to My School Data. That'll take you through a couple filters, and then you'll get to this page, and you can actually just switch what you're looking for by clicking on it. Whoops, my session timed out. So we're on student count here, so you could scroll down and then you can see all these spreadsheets. They go down to 91, 92 actually. And I've gone in and pulled all that data out for you. So that's where this data is derived from. Now, if you notice, I didn't highlight the last one. The last one's actually an unaudited count that I received through Epicenter, which Epicenter is the file exchange program between the charter school and the charter school office. So that's kind of how we get our documents from the school. It's this program called Epicenter. So through Epicenter, I received a form that's called the DS4061 form, and then that's an unaudited count form, and that's where this is from. So if the number changes due to the audited number being different from the unaudited number, this number is subject to change next year. So just be aware of that. So over here we have percent change. So this kind of calculates a percent change from count to count. This is for our numbers people who like to see the percent change. And then down here we have our visual display of the data, which shows the count data portrayed on a graph. So that's what that is. And then down here we have the free and reduced lunch counts. These are all derived from CEPI again. And then over here we have percent free and reduced lunch. So this takes the free and reduced lunch count and divides it by the total fall count and puts it in a percentage. So you'll see these numbers over here for each particular count. And then down here we have a graphical display of these counts up here. So that's what that's associated with. Now page 4 is the notes section. So this is actually kind of broken down in a couple different segments, but these are derived from the audit. They're just segmented on this sheet as references. So notes. So this is the debt section. So this is, you'll see the notes payable, related party note about a leasehold improvement on page 27. From page 27, building lease. The building lease information that we talked about. Here's where I said the auditor said it was approximately $343,000. I wanted to know what it exactly was, and since I was given the information, I utilized that, and that's why I actually calculated out. I think it was 343,808, but that's off the top of my head again. It's up on page 1. We went over it. So that's what that's all from. If you wanted to look at anything up or you had any questions, this is where all the information that was in those 4 boxes on page 1. This is the information that that information is derived from. So below that we have a management company note. So this has anything dealing with the management company, so purchase services, and then the agreement with the Universal Management Company, and then the page number references, so page 28. There was no findings, which is good. For those who are interested, out of the 42 schools we authorized, there was 8 total findings, and of those findings, 4 were dealing with schools small in scale that had a lack of segregation of duties. So it wasn't justifiable to hire someone to segregate those duties essentially. So meaning we only had essentially 4 audit findings, and those have since been stated to be corrected by the auditor. So kudos to you guys for not having any findings. Bay Mill schools have done pretty well in that respect this year. So below that we have some BMCC notes, which I classify these as anything that isn't related to debt or management company information that was also relevant from the audit. So here's a note about the net position. Actual expenditures being over budget by $10,768. So I'm going to pause the video for a moment, and because I have something to show relations to that. Alright, I'm back. I had to look something up in the accounting manual. So I talked about there being an over budget amount. So here's something to remember and consider. So this is from the accounting manual. I had to look it up. That's why I had to pause the video. So violations of the Uniform Budgeting and Accounting Act. So it states that an administrative officer of the school district or PSA, which is Public School Academy, shall not incur an expenditure against an appropriation account in excess of the amount authorized by the Board of Education. The administrative officer or an employee of the school district shall not apply or divert money of the school district for purposes inconsistent with those specified in the appropriations of the local school board. And then there's the law reference. So we've had a couple schools that went over budget like this. So I pointed that out to all of them that have done this. This is actually very minimal compared to the other ones. It's still important to note that the board has to appropriate funds before they're spent. So that's something to remember for the future. And again, it was a small amount in comparison to the other schools, but it's still $10,000. So it's important to appropriate things, and the board needs to budget things in advance. So that's all I'll say related to that. March. So this talks about the high school being eliminated, and then page 29 references some related parties. I've already spoke to these 4 because this is how I calculated the building lease, but this is directly stated in the audit, so it's important to realize for the board to know this, and for the charter school to know this. Charter school office, excuse me. So I've mentioned this to our team at the office, so we're aware of it, and it's page 29 of the audit. and it's been in there for a couple years, and we've brought it up to Dykema and stuff in the past. So we've been aware of it. So it's just something everyone should know is expressly stated in the audit. So this document is reviewed by Mariah Wanek in our office. Then my contact information is albertb@bmcc.edu. If there's any questions, comments, concerns, let me know. We hope you enjoyed the video. We thank you for what you do for the children of Michigan. Have a good one. Take care. Bye.